Jinesh Gopani, head equity at Axis Mutual Fund, joins in to chat about his take on the markets. Jinesh, hi, morning. How are you feeling about the market? A little disappointed that global markets are keeping us back, or excited because crude is cooled off so much?
Exactly. Crude cooling off and rupee appreciating a bit. I think it's a big positive for India's macro balance sheet. Crude coming off by 30%, rupee appreciating is all very good for India. I think from a longer term point of view, if this continues like this, or if crude stabilizes at this level, then I think we are in much better shape, and maybe after a few months you will see the benefits coming out in terms of the trade deficit number and the current account deficit number. So I think net we would be more bullish at this stage than maybe, let's say, what we were 2-3 months back when crude was at a higher price. Having said that, given the global market scenarios, too many volatile news around election will keep the markets on a volatile phase, and hence we expect that you are more on a consolidation phase till some of the events go out of and then you will see the momentum back. Also, the earnings season has not been that great as expected. There has been margin pressures which you see because of the raw material pricing pressure. So either the growth was sacrificed or the margins were sacrificed. So till the time the momentum comes back on the earnings growth side, I think we would have to live with this pain of consolidation in the market.
Okay, but how? I mean, I think in due course of time, fund managers such as yourself will start preparing your portfolios for the volatility that one could, in a way, not prepare for, but it's just the volatility that can come by because of the election risk for the markets in 2019. Are you being mindful there?
No, I think very difficult to take a call on that, and we would like to be more neutral on that aspect. Our idea is to be just looking into the companies who have been in existence for many years and have gone through this volatility. So I think fundamentally, if things improve, companies, businesses starts doing well, then I think all these events are more of a passing events. Obviously, a big outcome, a negative or positive, will have its own cycles in the market, but that would give us an opportunity to either invest or to exit depending on how things are panning out on the election side over next 3 to 4 months.
Yeah, indeed. So how is it that you, adapt yourself to the current uncertain and volatile times, Jinesh? What is that one tactical equity strategy that you adopt? Do you stick by with the large caps, the quality names, the compounders of the past? Do you brace yourself for a sector rotation, because it seems that that's pretty much playing out already? What's the tactical strategy here?
See, I think if you really see, India is more of a domestic driven economy, and some of the factors like crude really benefits or they are negative for India in that sense. So our job is to just buy good businesses which are run by good quality promoters or the managements or the professional managements, and they have seen these cycles of ups and downs in last 10, 20, 30 years, and they know how to navigate those phases pretty well without hurting the businesses or the profitability of the business. And I think it is better to stick to them because they are the compounders. They deliver shareholder wealth, and that is where your portfolio construction should be.
Okay. How are you looking at IT and pharma in lieu of what's happening with the currency?
See, I think to be very frank, when crude and currency is in your favor, then domestic sectors are more apt to look for. Having said that, it's just been 15-20 days of crude cooling off significantly. So we'll have to see how really things go by in next 3 to 4 months on the crude side. More on these two sectors, I think you have to be very stock specific. Even in that sector, you are seeing some of the companies edging towards double-digit dollar revenue growth, whereas some are still in the single-digit 7-8% kind of a growth rate. Even in that, if you want to be in that sector, then it is better to be with the leader who has been able to navigate the bad phases of their cycle pretty well and come out pretty smartly. However, I think we are in a way, if you take technology, it is more of an hedge over the domestic sectors because the growth rates are still not that great what it used to be, let's say 7-8 years back, and it is more of an hedge than participating big time into those sectors.
Sugar an opportunity, or rather space where you find opportunity, Jinesh? Also considering, it seems like it's a sweet victory for India. India is set to beat even Brazil as the world's top sugar producer. And given the kind of outlook for not just Brazil, but even Thailand and EU, considering their production output has been revised lower, it seems like India is going to be in this steady leadership position for some more time to come. Is there opportunity within sugar that you identify?
Sorry, we don't have that much analysis done on that industry, and since we stay away from a commodity space in terms of the portfolio construction, I would not be in a position to give you a correct analysis on that.
Okay, fair point. What about some of the oil sensitives, aviation, OMCs? Is it time to buy them again?
No, so again, I think you have to be careful what you are buying, what kind of stories you are picking, what kind of managements you are picking. So it's very difficult again to take a call whether crude will stay at this level. I think the more broader point is, if crude stays at this level, the entire macro economy shapes up well, and hence you will have many other stories to play which are more domestic linked, be it banking, financials, auto, consumption. So I think wherever you know the businesses very well, where you can do your research very well, I think that is where you should put your money. Specific to your two sectors, again, OMC is difficult to take a call because it is more of a commodity, and how they will pass on the price declines at the end of the to the consumer. And on the aviation sector, again, there are very few companies to buy, so you have to evaluate and take a call on that.
Okay, fair enough. How are you looking at the rural demand theme right now, and how are you adjusting your portfolio to take advantage of that opportunity?
Yeah, I think rural is picking up nicely. However, the monsoon has not been great this year, so we'll have to see how much that would impact demand, but too early to say that. Also, the government spending which is happening is really helping rural demand picking up nicely. So I think if you see our portfolio, we are into stories in some way or the other which has positive impact due to rural economy bouncing back, and we are happy with that portfolio.
Okay, that then is the view. What about NBFCs, Jinesh? Because again, very contradictory views there. While most believe that there could be some lingering impact of this liquidity crisis, but is it time to separate the boys from the men? Go for the quality blue chip names among the NBFCs, the more consumption driven stories, because they would in any case stand to do well.
See, I think every time you have to be always in a quality companies, whether it is private banks, whether it is NBFCs or consumption theme. I think this is the great time to evaluate and differentiate between men versus boys. I think some of the NBFCs, select NBFCs, as we have always been saying, are in great shape. Obviously, the cost of doing business has gone up, but as the liquidity situation improves in the market, I think those boys will get, those guys will get more and more money in terms of liquidity, in terms of borrowings, and they can chug along well passing this phase. See, basically the NBFCs who have been able to manage the ALM mismatches well and the asset quality well will do very well over next after 6 months once things improve slowly and steadily. And as let's say tier 2, tier 3, tier 4 NBFCs slows down because of their business model, I think the quality guys or the top guys will have a bigger benefit to play out. So I think some of the lending verticals can be done by NBFCs only. So let's say a consumer finance which are a low ticket size, or a home loan which has a high cost of processing and collection and everything. I think some of those verticals are very good to be done in NBFCs. If you really see even why many of the private banks also have NBFCs now, it is precisely to do business more efficiently rather than having a high cost structures which are unfortunately doesn't allow banks to go all out in terms of penetration in the lower ticket size businesses. So obviously some of the NBFCs who are leaders, who are strongly backed by the parentage, are here to stay and will do very well along with the other private sector banks.
Okay, and finally, Jinesh, how is it that you're mapping the earnings picture to help justify valuations at these levels?
So I think it's a great point. When we start the year, we start with 15 to 18% APS growth, and by the end of the year you come down to 10-11% EPS growth. So it is always a hope trade, and unfortunately it doesn't surpasses our numbers. So I think as of now still the earnings number are not that great as you would have expected, especially after demon and GST stabilization or being in the base. So I think December quarter should also be okay-ish type depending on the sectors. However, the crude oil prices coming off, also the rupee appreciating, will have some margins coming back to the companies, and that should help in terms of, so December quarter should be better than the September quarter, but given the valuations, I think we'll have to wait for 1 or 2 quarters to really see whether this macroeconomic stability is around, and then you have a micro which starts doing again very well.
So Jinesh, at Axis, what is your year-end Nifty target? And by year-end, I mean financial year, considering the calendar year is going to be ending soon, next month itself. Do you believe that the market could test and even reach the, the psychological 10,000 mark, which up until now we've been holding? Would you have a range in mind, both on the high and the lower end of the index?
So frankly, we don't have a number in mind. We don't look at markets on that way. We more concentrate on the businesses which will continue to deliver 15-20% growth rates, 15 to 18% ROEs. See, Nifty number is just a number, and that doesn't give us any realistic picture about what's happening in the economy or what's happening in the market in a big way. So I think it is very difficult to give you a number in that sense, but some of the events which let's say were negative, like crude oil prices or rupee depreciation, are now in our favor. Hopefully if elections are in our favor, then obviously we'll be on a rising trajectory rather than on the a falling off trajectory.
Okay, Jinesh, thanks very much for joining us with your views on the markets.